Hello guys and welcome to another post-market analysis of Bank Nifty on October 26, 2023. So this is Bank Nifty chart on the 10-minute time frame. But let's start from the daily charts as usual. Okay, so this is the Bank Nifty's daily chart, and this right here is the today's candle. So from the last few days, we have been talking about this double top formation here from the last 1 week, and we have waited after this a breakout candle right here for the confirmation or for the retracement, and the market has given us a beautiful confirmation. And we are talking about market going up to 41,500 to 300 levels in the next coming days. But y- you should be careful. You cannot always expect that kind of a moment in a 1 or 2 days, and there might even be some pullbacks in between. That is what we have said in the pre-market report as well today. So we have asked not to be very aggressive on your trades and be very calculative about and careful about your position size. So today market has seen this a bearish kind of candle there. Not a bearish kind. It is like it is super bearish candle. So this has happened with the market. That was the case. Okay. So the major trend was still the downtrend only. There is no, it is very clear and obvious that the trend is a downtrend starting from that point, with exception of a couple of sideways candles happening in this area. Okay, so let's now go to the 5 minutes candle and dissect the price action and see what we can learn from today's post market. All right, now I'm taking that arrow off. Let me increase. So the green zone here has come from the daily time frame. Okay, so today Bank Nifty have opened here and from there it has not seen any bullish signals for the next a couple of candles. So till here you have seen only bearish candles for the next 15 minutes till 9:30, and this is only one candle that has appeared, that too within the previous candle's real body. This is a kind of inside candle format. So those who are aware of the inside candle pattern there could have entered, and this can also be called as harami pattern, but there was a no proper confirmation for us to go towards the call side. And obviously when the market, the major trend of the market is in downside, towards the downside, and where you have seen the breakout of uh, the bank nifty, you cannot bet towards the call side. Obviously the whole market is towards the downside. Okay, that would be very foolish to take trades towards the call side. So there was no enough reason for us to go any call just because of this one green candle. But with the breakout of that, some people might have taken a chance there. So that is into this candle, but still there was there was not enough reason. There was only one candle halt here, so we cannot really, you would have not get that moment. But what happened after that is, right from here, you've seen a couple of candles for a good 20 or 25 minutes, even half an hour after this particular hammer like candle here. This is not a hammer because you have got a top wick more than the size of your real body. In this case a real body is a very a doji like setup. We'll talk about that candle, doji candle setup, that is a dragonfly candle. We'll talk about that candle in our further videos. But for when the market was spending for the good 25 minutes in a sideways market, you would definitely want to mark this zone as a support area. Even so, this green candle couldn't change anything because It's the major trend was still an uptrend. And what's interesting here is the breakout of this zone that we have created in the last half an hour. You see, this particular red candle here happened to break this previous marked support area, but we cannot enter into the market with just one candle confirmation. Either you should wait for the follow through candle to form a bearish candle, or wait for the price action to get into the trade, wait for the price action to come into this area. Let's Only then you would have been taken a call towards the downside. In this case, both were happened. You have seen a confirmation candle after this breakout. Let me mark that candle. So this candle is a confirmation candle that is telling us that yes, the market is interested to go towards the downside. And also you would have added some positions there towards the short side into this candle, into this candle. Also, it has the prices have retraced into this previous support area and formed a bearish engulfing pattern. See, for a bearish engulfing pattern, you need two candles, okay, where your second candle should engulf your first candle until and unless your first candle is a doji. In this case, this candle is a doji, and this is kind of engulfing the previous candle's real body. And also there was a decent we cannot call this upmo, I know, but there is a decent swing from here to here. And especially when you know that the market is in the downtrend, and because of this formation there, because of this formation there at this support area. See, one reason is this candle, and the second reason is this entire, it has come in this zone, which is a previous support zone, which would act as a resistance zone now. You could have taken, all right, sorry, that's my mistake. Let me get the chart back. Yes, we have the chart there. All right, so now we have couple of reasons that is telling us that the market is again giving another opportunity. And also, see, this was a kind of pullback, this was a swing low, right? So you can even consider this line as a breakout. Now we have another reason why you can enter here. See, people who know how to enter the breakout, a true breakout, would have entered into this candle right here, the 1025 5 minutes candle. Those after seeing this, forget about the sorry, bearish engulfing pattern. At least after seeing this red candle, which has failed, to cross this level again, showing some kind of bearishness, would have entered there. And those who are very familiar with the engulfing pattern would have also taken into a trade there. Or those who have a good knowledge on the swing highs and swing lows would also have entered here, because let me draw that too. See, this was a this was the market movement. So that's kind of that's kind of a breakout there. So we have a multiple reasons here to enter into this zone. And even the risk versus reward ratio was looking good, because there is no hurdle towards this downside, nothing in between, at least in the last a couple of days or even a week. So you can expect a market to move a much faster levels from this from this point, from this zone. See, even the market is in the major downtrend, we are not recommending you to immediately get into the first candle when you see a candle there. No, there is no need to be that greedy. Even when the market is in a very good downtrend, and even when you have seen a good breakout on a daily time frame, okay, even then you should wait to see a good location to enter into a trade. That is how you should be doing. So all right, let me take all these Let me take all these arrows out. Now we have how many regions here? We have one, we have two, that is the area, we have three, that is the pattern, we have four, that is this swing low, a break. So we have four reasons. All right, okay, let's check another, let's check any other parameter if that is matching. Okay, now we have a volume there, now we have a volume bar there. All right, see, see for this candle, for this candle even the volume was marginally higher. Okay, you see there, that was marginally higher than your, but that is way too much of analysis. You don't have to go that deep. You have 4 points here, you have four reasons here to, to get into the trade, so that would be enough. And let's mark that trade. Your trade would have been there with this as your risk above that. And see, after seeing this confirmation, you can blindly, you would have added your positions into this candle. You would have added more positions while you are on trade into this candle. That is giving more confidence that the market is going down, if not at least even into this candle, even into this candle. Okay, and that was your can I mean your trade, and this was your stop loss right above this support zone. Now you can wait for the market. You can keep, you would have keep trailing your stop losses. See this, the 1:1 is your first target. Let's mark your target in the blue color. And the market is when it is touched your first target, then you can trail your stop loss and you can keep continuing with the moment. And see here you have a two times risk versus reward target. All right, so that is your second target. You need very strong reason to get out at least of this when the market is in such a big downtrend. You need a good reason. So till here you are in trade, and from there you would have got your stop loss to this point. Okay, so here markets have gone, and here you have found a kind of swing high. Okay, we'll again get that. Okay, so at this point, mark, this is the a place where, okay, the market has seen a good confusion there. From this point you can notice that this can be a support area, because from this point prices have gone up. Okay, it has formed a kind of a spinning top here. All right, and then it has, see, this is also an engulfing green candle engulfing a red candle, but this cannot be called as a bullish engulfing candle because it is coming after an uptrend. In order to call anything as bullish engulfing in the same setup, if that is coming after a downtrend only, then it is a bullish engulfing pattern. See the previously mark with this. Imagine when the market was there. Okay, you could have marked this as your recent support on an intraday time frame, and you can see even this green candle was taking support. So from here, what you would have done is, this is a kind of swing high, this is a kind of swing high. You would have this target is reached, so we can get that off. You can see that this is forming a, okay, so from there, this is a kind of movement that you are seeing. So you would have, when the market is breaking this swing high right there, okay, you would have exited your trade that is still here. Okay, so you would have exited only there, that is 100 points. It's okay, it's fine. You don't look to target the complete movement. Okay, no one can make it possible, and I mean, even if it does, it is going to be a very a blind trade. So it's fine when you have some sort of a strategy or a system. Okay, that is enough. You don't have to be so much greedy of catching the entire moment. You could have gone, if this swing high was broken down, you could have gone trailing your stop loss for the down levels, but that was not the case here. It has seen some sort of rejection there, and the prices when came to break down this support, you could have uh, and even for that matter, even this is an inside candle setup, and it is also a haramic, which can also be called as a harami setup. So at least after seeing this, those who are very familiar, they could have got their target here or exited here. Okay, but it's okay. We will let's consider that that was our target. So from this point, what market has done is, here it has seen again a huge rejection. Okay, it has again seen a huge rejection there. So let's mark that as our rejection level. I'm just marking this wick area as the rejection. So what prices have done is, next time they didn't come all the way till here, they've rejected from there. Okay, they've rejected from there, and even it has gone till there, and it couldn't cross this section there. All right, and here you are seeing a bearish engulfing pattern, but this bearish engulfing pattern is good enough only because you're on the way down. This is the place where market has taken some sort of support. So this could have been a trade. Okay, this could have been a trade if risk versus reward ratio is at least 1. But let's check that. If that was your, stop loss, if this was your target, see, your risk versus reward ratio is not even 1. If you're getting 70 paise, you're losing 1 rupee in this case. So this is definitely not a trade. So what happened, even after seeing a couple of candles there, okay, you can now safely imagine that this entire area is also acting as support. Okay, now with this one green candle breakout, you cannot say that yes, this was a breakout, now I can go for a call. No, that's not enough. You need to see a confirmation candle there, or a retracement towards this level and forming a bullish sign there. Even though there was a bullish sign, remember this would have been a counter trend, because the major trend here us for today is a downtrend. Okay, so this would have been a counter trend, so which is again not recommended. But if you are very technically advanced person, you can take that. All right, but see here, after see, imagine when the market was there, this is an engulfing pattern. Obviously, we're not recommending to take call, but you see this candle at the 1425. Okay, this was a very strong zone, and you can see there are a lot many wicks here. Okay, so here you have a bullish engulfing pattern there, and you're in this way going upward. That was your first hindrance. So you could have made some money here again, if that is allowing us, giving us a good risk versus reward ratio of at least 1. In this case, that would have been your reward, and this would have been your stop loss. See, even here, your risk versus reward ratio is not at least 1. You're getting 80 paisa and you're losing 1 rupee, which is not a good call. So that was a no trade. All right. So, but see here, you have a two mark. Let me draw that. Okay. Before that, let me take this confusion out. So it is all about identifying with the previous candles, and able to draw support and resistance areas continuously throughout the market, and keep modifying them as the market asks you to do. Okay, you can all read it from the charts. So here you have one rejection. Okay, here you have another rejection. Okay, initially after seeing this rejection, after prices were below this rejection for a good long time, we have drawn that. And after drawing that, let's assume that this was a bearish engulfing pattern there. Mhm. So it is all strengthening up this resistance area, and especially after this breakout, it couldn't go further above this level. And again, you have seen that formed a red candle there. there was a risky trade there. You would have entered there knowing that this is a failure breakout towards, this level to keeping up there. But again, you don't have to be a very very curious to take trade on every candle. So it was a peaceful trade till now today, even though, like, there was a moment. Okay. See, in further videos, I will tell you where to exactly keep your targets and all that comes in the future. So till then, trade safe. Okay, always trade in single number lots. I would recommend only one lot. At least you make profits on a consistent basis for a good 3 month period. Only then you take some risks. Okay, so always remember that stock market is a place where 90% of the people lose money. So it is not, don't consider it like a gambling game and lose money. And there is 90 rules also in the stock market. Like by now most of you might have already known, that is 90% of the people will lose their 90% of their capital in 90 days. So don't fall into that. Give enough time for the learning. Okay, do case studies on the charts like this with us, or at least reads a lot. At least you give yourself time. No one can become anything overnight with one single video. I am not telling you that this video is going to change you, uh, or make you as a world's number one trader. No, nothing of that sort is happening in the real time. All right. So this was the only trade which gave us a good 103 points we were able to capture today, which is not bad in a bank nifty. It's okay. You don't have to be worried about. See, even if you are taking a part of this moment, which is definitely good, without any stop losses. Yes, there were a couple of trades here. There was a couple of trades here. There was a trade there. Okay, don't worry about all that. Don't try to do over trading and make money. In the process you might lose your temperament and definitely lose money there. Always respect stock markets so that it respects you back. Okay, so that's it for today. And let's meet in another post market analysis video. Thank you, thanks for watching, and please do subscribe.